just wanna be free with my people to prosper and hold it down. Don't you sit and wait, contemplating on a revolution. The time is now. I just wanna be free. 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 Can't you see? I just wanna be free.
Okay. Another episode of the Things I Wish I Knew About Money podcast. I'm your host, Kamille Smith. I know. It's been a long time. I shouldn't left you without an episode to listen to. um, but you wanna know what? I've been in a funk. I probably mentally checked out for a couple of days. So I didn't feel like doing anything. I didn't feel like recording. I should have recorded Sunday when I was in the mood to record. Hold on, these glasses. Hold on, I just wanna. Nope. I don't know how you guys with glasses do it, but here we go. Actually, it'd probably be better like this. Actually. So I didn't feel like recording or anything. I knew what I wanted to talk about, and I just said, I'm just not in the mood to do it. So my bad. It is what it is. However, it's episode 232. I don't think I said it. I'm your host, Kamille Smith. I apologize. I'm been back for a little bit. I really need to. I know whatever is going on in my personal life shouldn't affect me bringing out something for y'all. So I do apologize. I'm hoping because what we're almost in the August is almost over. I definitely want to speak about back to school, so that is going to be the next one. Ding! Anyone wants to hear that? That's going to be the next episode. No matter what, whether I like it or not, I have to because the youths, the kiddies, the youths, the adults, the older adults are going back to school still. Soon, actually, except the ones in the states. I was shocked and appalled that my friends in the states were already going back to school. I was like, damn. But had to keep remembering they finished school before us and stuff. However, yeah. So I have to keep a commitment with being consistent because as Dale would say, consistency is key. And I haven't been doing that. And I'm acknowledging that. And that is on me. So I have to do better. If you notice, I don't have an arm sling on right now. My shoulder is 95%. For the ones that have been checking on me or helping me while my shoulders is mash up, I appreciate you and all that stuff. So yeah. So I realized on my last episode that I actually have never spoke about a credit score. And that's kind of wild, right? That's kind of wild because when it comes to credit score, I want to put it this way. Credit score in North America is like your financial representative. I kind of, or not representative, sorry. It's not just a number, it's like your passport, your financial passport. And everyone knows me like to go places. It's been a minute, except this year. But it really in North America, I find that it's more strict on how your credit score is. Trust me. It depends on how you're going to get a job. It depends how you're going to get rent, like rent, or even when it comes to like financing or getting a credit card. It's a number that you want to keep up to score, and you don't really want to f with that. If you do, um, you have ways to fix it. But I thought today, why don't I show you guys like the 10 mistakes that folks do when it comes to their credit score. And actually, I want to, gosh, making sure that you guys can hear me. I had to put this mic in a way that you can hear me. There we go. Oh, yes. Sorry. I'm sorry. I apologize. Before we start, I want to show you guys the range that it is. I know I've shown you the range of it, but I don't think I've shown you in a while. And if I'm talking about the range, I'm thinking about when I did it in a webinar and stuff. So yeah. Ooh, before I start, it's been a minute since I've asked you guys for this. Hey, the option's still there to get me a coffee. I haven't I actually haven't had coffee in a minute. And when I say a minute, I mean Saturday. However, you have to understand, I normally have coffee every day or a matcha latte. Big up Tika for putting me on matcha. I used to make fun of it. I think the time when I couldn't have it's the time when I was doing a detox and the only option was matcha. So I'm actually glad that I got introduced to it because now I can't live without it. If you ever seen my stories and stuff, you'll kindly kind of see me having a matcha like every day, right? So I want to show you guys the image. I know we've seen the image time and time again, but I think it's only fair. Which one do I want to show? Let's show this one. Hopefully it will show nice and proper. Do I want to? Do I want to go based on Equifax? I think it's only fair I go based on Equifax or actually sorry, I'll go based on Nerd Wallet. Big up Nerd Wallet because I think they've been calling for me in a while. I'll open this one. Okay, let's see. Let's see if I can share a list with y'all. Mm. Yeah, share the screen. Ah, there. Boom. There it is. So, gosh. Oh, I just does that. Let's rock with that. Are we gonna rock with that? Yeah, let's rock with that. Okay. So the FICO credit score, there's a range from 300 to 800 and up, and I'm assuming up to 900. Um, I will be honest with you. I think I've experienced every range. And you know, it all depends on like your lifestyle or what's going on in your life when it happens, but it's always better to fix it up. Fix it up as soon as you can, right? So there's poor, which is this. Hopefully there's no one colorblind. There's fair, there's good, there's very good, and exceptional. Great. So these are the range or excellent. I would say excellent. So these are the ranges that you can go about. And you can actually look at this on Equifax, TransUnion, or even some of your apps, your financial institution apps. They actually show it, right? So I think it would be a good idea to have a look at what your score is There's even, gosh, I had it. I talked about it last time. What's the word? What's the word? Hold on. I gotta check my thing. It slipped my mind. Borrow well. Boom. There. Borrow well. Borrow well is another one that you can look and you can review that weekly and stuff. And this is like, these are ones that's not going to ding you if you actually take a look at it, right? However, I want to help everyone out with learning the ways to just minimize the mistakes and why it could happen and how we can fix it at the same time, right? So let's go on with the first one. Let me stop sharing this. So the first one, and we all know this one, right? Actually, I'm going to show you guys one after like the range of it. I'll do that afterwards, don't worry. So the first one is missing payments. Who's guilty? We've all been guilty of missing a payment, right? Whether it's your credit card, your phone bill, Roger bill, all those things there. Yeah, they're looking. They are looking. Um so I would say this is the one, this is the highest one that will ding you the most. So I would say try your best to be consistent with this, right? Um I can't tell you how important it is. If you remember when Onika came on to talk about like credit and stuff, like as a credit collector, there's that those symbols, those R, I want to say R1, R2, R3. Hopefully she hears this and is proud of me of remembering. You don't want to get to R7 or like, So ways to fix this is try to catch up on your payments as soon as possible. I can't stress this. Like, put it in a calendar, do an auto pay. These are type of tips, solutions that can help you be mindful about them, right? So that's number one. Number two, high credit utilization. Whoa, let's say it first time. You guys know there's some words that are tongue twisted for me, but that got it down straight. Okay. So ideally, okay, so here's the thing. Usually when it's over 30% utilization, that's when you're starting to get um a heavy signal light. They're like, you're kind of in the risk. So example, you have $1,000 credit score, not credit score, sorry, $1,000 limit, right? And you've used 500. 500 is 50% of your utilization, your credit score utilization, right? It's more ideal if you were to bring it down to 300. Shucks, even if you want to pay the whole thing, zero is better than whatever, right? So you want to keep it below 30%. I know some of y'all are looking at me like, okay, Kamille, I get it. But we have to be mindful about this, right? Um, Try to pay it on time. Try it, whatever it takes to bring it to 30%, do it. Okay? So I ask, right? Number three is too many credit inquiries. Um, Remember how I said um, you can look at Equifax once a year because you get like one free one every year without getting dinged. And when I mean getting dinged, it's there's hard pulls and soft pulls. So a hard pull is when you're like trying to get a new credit card, trying to open up something. Those are hard dings, right? Soft dings is like when we think about I'm trying to think. I remember it. It lost me for a second. When we look at like borrow well and stuff, those are soft pulls. It's you're not really affecting it So you can do it as be mindful how much times you do a hard pull and a soft pull. That affects your credit score as well. I would just say whenever it comes to doing application, this is also like when you're getting a mortgage, that's going to be a hard pull. When you're getting a new credit card, that's a hard pull. When you're getting a new car, those are considered hard pulls. Rent, even like if they have to, some landlords want to see how well your credit score is, right? Those are considered hard pulls. So the only way uh to fix that problem or have a solution is span out the application openings. And you shouldn't be opening up so many things at the same time. That's wild. That is wild. So, like a 14 to 30-day window, even longer. I'm not judging. I'm not judging, but it's wild if you try to do it that much, right? So be mindful about that. Number 4 is closing old accounts. Back in the day, you would think, yo, as soon as I pay off this thing, I'm dashing it away. Wait a minute, hold your horses. Especially if you have like, let's say you have 2 or 3 credit cards and you want to get rid of one of them. I know which one that is. It's that one that's annoying and that interest is high, but you've had it the longest, right? If you decide to close that one, then it shortens your credit history. Then golly, it will affect your credit score. So this is one thing that we don't want. Hear me out. Hear me out. Yes, you don't want to use it anymore, right? However, it's ideal. Maybe you would want to just put it away. You have it. You have it for one, like whether it's Netflix, whether it's what's another, Spotify. You have that one bill on that credit card and you pay it every month on time because you have an auto pay, right? Just keep that history. Imagine you've had your credit card since you were in university because they come catch you in university or college, right? Try to get in. I was gonna show you guys my turmeric gummies. These are the reason why my shoulder's feeling better and good sleep. Shout good beds are important, or good mattresses are important, but I digress. Sorry. You go to the college, university, they try to reel you in, and now you're 30 odd, 40 odd. That's like 10, 20 years of history. Stay with me. Stay with me. I'm not giving you exact numbers. Imagine if you were to get rid of that history. Yo, you're losing a lot from that, right? So just keep it somewhere. Just keep it somewhere. Just have a small type of reoccurring charge, and then you'll be okay. A small one that you can that's manageable. I always say manageable. Number 5 is ignoring errors. This one, sometimes there are some errors on our bills or fraud that can mash up our credit score, right? So this is why I say always look at your credit score, or not credit score. Look at your statement ever so often just to see if there's a charge that you're like, whoa, what was that? That wasn't me. I remember one time, um, which one was it? They One of my credit cards called me and they're like, "Oh, we're just trying to check up to see if everything's good." We're like, "Yeah, okay, cool. Did you buy something from the gas station?" This is when Why do I keep talking about stuff that goes with my car? Still heard about that. I was like, yeah, I went to Esso. Yeah, of course. Oh, did you go here? That was like in frigging California. And I've never been to California. I was like, no, that wasn't me. Okay, we're just checking because I just feel like it's some behavior that's like, incorrect. So boom. They fixed that. Thank heavens. But then sometimes even those payments that you thought you got rid of, and then all of a sudden you get dinged, you're like, yeah, no, correct this. I swear I canceled this out, right? So things like that, right? Um you definitely want to dispute mistakes. Dispute mistakes, dispute fraud. But however, listen, I am not telling you you had a wild day. I'm talking to you. You had a wild day and you weren't in your right mind and you decide to just spend and then you think you could just like tell them, "Oh, that's not me. That was fraud." I'm not saying to do that. That is illegal. So I'm not telling you that. If it's actually a mistake and fraud, then you should do that. Yes. Yes. So don't ignore the errors that are on your statements. Just look at your bank statements as often as possible. I don't care if you do it monthly. I don't care if you do it quarterly. Just or at least yearly. Just look at them. Right? There's always going to be errors. The next one. Actually, I'm parched. You know what? Should I do a commercial? I'm gonna do a little commercial break because I feel like I haven't done my commercials in a while. And I want you guys to remember there's some of y'all that haven't done your taxes yet. It is okay. It is okay. Uh, I'm here. I am here. You can contact me at info@fitnanceiq.com. You can book a meeting. Boom, bam, bam. That is always in the show notes. But I'm just going to have a little 1-2 pause, if you don't mind. Mm-mm-mm.
Imagine turning financial chaos into calm. Meet Alex. Alex is a young professional buried in bills and receipts. They're overwhelmed, unsure where to start. But then, light bulb moment. Alex discovers Fitnance IQ. With just a few clicks, Alex is setting up a personalized budget thanks to Fitnance IQ's user-friendly tools. It's like having a financial coach right at their fingertips. Fast forward a few weeks, and Alex is breezing through bill payments, watching their savings grow and even planning for the future. No more stress, no more chaos, just simple steps leading to big results. Alex now shops with confidence, knowing every dollar's accounted for. Fitnance IQ didn't just help organize Alex's finances, it gave them peace of mind. Ready to take control of your finances? Visit Fitnance IQ today and start your journey to financial freedom. Fitnance IQ. Simple steps, big results.
The very last second, I was looking for water. I couldn't find it. Darn it. Always make sure you have water before you record, Camille. Yep. But yeah, okay. So, what's the next one? So, remember, I'm really doing this so we're able to understand the importance of whether you're going to be in the poor section where it's 300 or in the excellent section. And I think most people are normally in 740 and up. So I know there's a lot of people that strive for like better and things. So kudos to you. Boom bam bam. But yeah, I just want to remind y'all the reason why I'm having this episode is just to remind you guys. And I wish I could have hopefully I could do a poll. If the poll isn't up already, hopefully I can have one. It all depends because I am gonna bring this out today, Wednesday, hump day. Um I think Wednesdays is a little better than Tuesdays. I acknowledged. But I digress. Sorry, I always get distracted. Y'all know this. So number 6, using or only using one type of credit. Granted, some people only know credit cards, right? But there are different types. There's line of credit, there's like financing a car and all those stuff, like small loans. I don't want to say to have so many types of credit per se, just because I need folks to be mindful of how they're able to manage it. But I do want to say, like, if you have a credit card and a line of credit, you're kind of in a better position than someone that only has credit, right? Or someone that doesn't have any at all, right? Want to be mindful about that because maybe just basically I almost call them CRA. The credit bureau likes to see, well, okay, what kind of credit can you handle? Can you handle a credit card? Can you handle a car loan, line of credit? Yeah, fine, cool. But I mean, if you can't get the car up front, then that's even better. But like, just being mindful of the types of credit you have. So if you have a credit card, line of credit, you're good. I wouldn't say um get more than that. Oh, and here's a tip. Here's a tip. This is for the parents them that wait. This is going to be a scary one. Cuz the same way how I feel about car insurance, and I want to say it in a way that you guys aren't going to say, "Oh, Camille said just do this." There are certain ways to help your family members or your children, family members' children, to have a better credit score, right? However, only if you see that they are responsible enough to be able to handle that is when you would consider putting them as an authorized user on your card. And I'm going to talk about this in a different one too. I'm not saying do it for everyone. I'm just saying being mindful. There's ways to help add different types of credit to individuals. Okay? Okay. Okay. Don't say that I said do this and I didn't say that. If they are responsible enough. Okay. But I will talk about it in a couple, like my 9th or whatever. So, number 7, carrying a balance, thinking it helps. So, I think the misconception that a lot of folks had, and this is, and I know what you're gonna say, but Camille, you said keep it as low as 30%. Credit utilization. I did say that. However, what did I also say? 0 is better than 30%. So, carrying a balance, listen, the one thing credit card people love to do, they love when people have a balance, eh? You want to know why? Because there's interest. Okay? There's interest, and nothing slows down our wealth is then that interest where we have to pay back, or debt that is accumulated with interest. I was just looking at a reel today that was someone was bawling bawling about their what is it, student loan. I almost said OSAP, but it was an American, a student loan, and they were shocked that they have a 17% interest. I mean, it's a little better than a credit card, but still, I understand when you have a high balance that it's going to cost, right? So thinking, especially with your credit card, thinking that you carrying a balance is gonna help you. Nah, sometimes that's not gonna help you because you're going to be paying interest on that, right? And that's what the credit cards want you to do. They want you to pay the bare minimum. Don't even worry about pay the bare minimum. If you pay the bare minimum, it's just gonna take 100 years. Who wants to take 100 years to pay off their bill? Eh? Who? That's why I always strive if you have debt and you have more than 2 or 3 debts, fine, do a minimum payment for 1 or 2 of them and then add more to one of them, so when you get rid of that one, you can put that extra cash into that other debt. And that's like a debt snowball or avalanche method, right? But um the person that's advertising for you to keep a balance is the ones that is going to make money off of that. Nah, don't do that. Stop. But I know, I get it. I get it. Most of us have a balance on our credit card. If you're able to reduce it down, that's even better. That's what I'm trying to say. Stop thinking that carrying a balance helps. Nah, it doesn't. It actually doesn't. Why do we want to pay interest when we can have interest from our investments and things, right? Boom, bam, bam. I'm not gonna say everyone has experienced this, because maybe you have, maybe you haven't, but there's a high percentage that has maxed out their credit card. Maybe for a minute, maybe you know. I'm not judging you. I promise. Best believe I am not judging you. But but when I'm gonna bring it back up, when it comes to certain things that happen on a credit card, ooh, baby, when they see it more, it's not even 30% credit utilization, it's 100. Don't even get me started when it's over, because there's like, if you reach the cap and you haven't paid, and they give you like an NSF fee for like, it's not pretty. It's not pretty, baby. Maxing out our credit cards. This can drop your score, obviously, right? Let's aim for not having it at 100. And if you have to just freeze that bad boy until you pay it off, you gotta do what you gotta do. And I understand there's going to be times when it maxes out, but let's try not to max it out. Okay? Okay. Thank you. So here's the one. Co-signing without monitoring. I'm going to tell you this. I want to say, dang, was it before I went to Korea? I want to say it was before I went to Korea. I had someone that wanted me to co-sign on something twice. I at the moment, this was, I never heard the word, so I didn't know what it meant. So I had to ask. I remember I asked my mom. I was like, "What's co-signing? Is this a good thing to do?" And basically, it's basically helping someone out with a bill or something, or putting a bill in someone else's name. There are times when co-signing is wise, and there are times when co-signing is not wise. I will tell you a story. The first time I did it, I never understood, and I think they effed up my credit score. It was like a Rogers. It was a bill and stuff. Fine. I was young. I was young enough not to care because I felt like I could, because that part wasn't oversighting how I was doing overall. And then when they asked me the second time, I was like, you know what? I'm going to say yes, but I know it's not going to go through. But I said yes. And yes, sometimes I do that. That's a people pleasing part of me, my side, that I need to get rid of, but whatever. I knew that it wasn't going to go through. So I said, yeah, I'll do it. Didn't go through. I was like, hey, I tried. Merp. Right? But when I got my mom to co-sign, and I know this is the reason why I'm really hurt with my car. Is my mom helped me get my car. My mom helped me name my car. So she co-signed because my credit score wasn't strong enough by myself. I think it was something happened to my credit score and I was just bringing it back and things. But I had the money. It's just I needed a little boost. And I've heard this happen with others, like when it comes to um phone, mortgage and stuff. You just need a little boost, right? Um, but again, what I said before is if you're going to have some co-sign someone, you have to make sure, or sorry, if you do authorization, maybe that's a little bit different, but co-signing is serious shit. Make sure that person's reliable because ideally they're going to be affecting your credit score. And that's why right now I do have someone that's well, not co-signing. That's not co-signing. It's under their name, but I pay. I always make sure that I pay it. And if I don't, I say, eek. Let me just, put some extra in so I don't get into shit because I don't want to affect anyone's credit score. Right. So that's another thing is when you co-signing, essentially you are saying, hey, friend, I am trusting that you're not going to F up my credit score. But if anything happens, or no, I'll say it this way. I'm trying to think. Let's say, no, I can't say that because I don't like them. I'll say Mazda. I still love Mazda or Hyundai. I'll say Hyundai. So Hyundai dealership sees that I help someone, co-sign someone to get a car. And they're like, hey, baby, if they don't pay or if they go in default, we're coming for you. We're coming for you. So you better make sure the person this is the person that you're co-signing. I hope you better open pray that they stay with what you say, right? So make sure you double check those people. Yo, I get a email message every time like, hey, bills due. I know, I get the message too, but I understand why. Because you still have to monitor what people do, right? So one thing is if you're going to co-sign someone, make sure they're reliable and that you can afford to cover their debt. If you can afford that, so hey, if it's a phone bill, cool. A mortgage, car, it depends. How much do you love them? Right? How much do you love them and things? And the last one, you know what? I never understood this before when I was younger, but I guess it makes sense in North America is not having any credit at all. So they're like, okay, so like you only do cash, but you don't have a score. You're not even on our radar. So we don't even know if we can trust you. So it's ideally like no history, no score, right? That's why I said, remember the folks that got their credit card when they were in university or college and they wanted to cut out that, that's like going backwards, baby. That's like going backwards. We don't want to go backwards. We want to go forward, right? Um, so that's and then I know some of that like this last 10 years at least got a secured credit card or a small starter card just to get there to work their way up. I'm not saying this is wrong or if it's right. It's just if you want to be on the FICO score just to show a face, get something, a little something, at least like a $500 one, so you can at least it's manageable. You're not gonna overseed or overspend and things. There's one other thing I wanted to show you. What affects your credit score? Credit score overall. And this is why it's important. There it is. So this is. It's gonna show. Oh, we'll show us. Sorry, sometimes I have no patience with this. This is how I am. Let's see. Where is it? Boop, 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 boop. Okay, boom. Show it this way. Share tab. Okay, so if you remember what I said before, 35% of your score is your payment history. So pay a ting pun times. So sorry, I don't know why I said it like that. I'm sorry. I'm haunted right now. I'm haunted. So yeah, pay it on time. Boom, bam, bam. 35%. 30% is amounts owed, right? So that's important as well. Like your credit limit. Sorry, it's the utilization part aspect. So remember how I said, don't have it at 100% because it's gonna ding you. But if you at least have it at 30%, 10%, or a 0, then that's a little better, right? 15% is the length of your credit history. That's why closing a old account might do some things to you. 10% is new credit. So getting those new credit ever so often, and 10% credit mix. So just having a different feeling or different type of credit in your I want to say roster. So you just want to be mindful about that when it comes to your credit score. Again, these are the things that are play a factor. I don't know why it's saying 8. Is there something new? Oh, okay, yeah. This is something else. That's interesting. That can't be. Oh, okay, I get it. Well, I understand the income part and the soft inquiries. See how I mentioned the soft inquiries? Sorry, I got distracted. Seeing 8 threw me off. So ideally, remember the range is from 300 to 900. So I guess one of my questions, and you can put it in the chat. Nope. Shit. Whoa! I was gonna ask you what your score is. I would say don't say your score. Actually, back in the day, it was a secret. Don't tell anyone your score. Don't say it. But I think now it's don't tell me what your number is. I guess say if it's poor, fair, good, very good, excellent, or maybe that's not even nice to do. I don't want to put anyone on the spot. What do you strive to have? And are you happy at where you're at the moment? There. Okay. And yeah, and if anyone wants to sit down and talk about how to raise up their credit score, by all means, uh, contact me at info@finansiq.com. Book an appointment. Be able to sit down and just try to figure out this, because I get it. This number that that is showing, maybe you're not at the number that where you want to be, but you have the potential to be there. Just maybe you need a helping hand or a set of eyes to help you figure out how to do that, or get that motivation to start doing that debt repayment. Um, Figuring out how to auto pay your stuff so you're able to pay everything on time, getting more, um, seeing which credit cards is ideal for you, because sometimes people have the highest interest rate when they have the potential to get a lower interest rate. So there's something like that. Sometimes you just want to, avoid these 10 mistakes. If you've done all 10, it's okay. You're human. Okay, you're human. As long as you want to find a way to fix it, I'm here. I'm here for you. I'm here for you. Right? Don't be ashamed of how your credit is, if it's poor right now or fair. Um, as long as you know you want to do better, and we can figure a way to work out with this. And yeah, I just wanted to have an episode where it's like, I want back to the basics. Think I'm gonna do like a back to the basics type of episode ever so often. I know what you guys are saying. Kamille, you've had so many series that you haven't completed. I'm going to get back to them. I just sometimes when I'm in which I've been in a funk, I just forget about them. But I haven't forgotten about them really and truly. I do want to go back and help certain I do want to go back to certain series and talk about it more. I just think I want it with another person on. You know? Sometimes I love chatting by myself. You guys know I could chat by myself. But yeah, it is what it is. Um and yeah, I just want to help folks any way I can, right? I like to show up for folks, even when they don't want to show up for me. It's okay, I won't be petty. But yes, make sure you like, comment, subscribe. Hey, whoever just like try to unsubscribe, get your ass back here. Get your ass back here. Subscribe. I'm here. I'm gonna be consistent, okay? Just make sure you subscribe. Keep subscribing. Tell your friends. And hopefully you guys like the poll that I have. I can't remember what it is right now. But make sure you voted, okay? And I'll see you next time on Saturday. All right? Promise. I promise. Saturday. You'll see me.
I just wanna be free with my people to prosper and hold it down. Don't you sit and wait, contemplating on a revolution. The time is now. I just wanna be free. 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 Can't you see?